is the network able to keep up with the tremendous bandwidth demands of today's devices?
Yeah, it's able to keep up. It's just requiring an unbelievable amount of investment. The iPhone did something that we all expected to transpire.
Right.
We fully expected what you're seeing today. We just didn't expect it to happen as quickly as it happened.
Right.
We made a concerted effort about 4 years ago. We said mobile broadband is where it's headed.
Right.
So you want to get wireless bandwidth out there, go hard, go fast, get wireless bandwidth out there. And we launched the first, what I'd call consumer class mobile broadband device, the old Blackjack. I don't know, did anybody have a Blackjack? Did great. And then when Jobs brought us the concept of the iPhone,
right,
which was a PowerPoint slide, literally,
right,
that fits with where we want to go. And so we put this thing on the network, and it has taken off, as you know. And in 3 years, our mobile data volumes are up 5,000% in 3 years. And as you have experienced, if you live in New York is one of the problem areas. And we've had a challenge keeping up with the bandwidth. We're starting to get ahead of it, but this is not going to stop. You know, we think this goes 40, 60x over the next 5 years.
Well, 40, 60 times
where we are today.
In the next 10 years?
5.
5 years?
Yeah.
Wow. Well, so what can you do about this? I mean, look, there are these surveys which you are well aware of, the Consumer Report survey. Their users did not like the AT&T network. Verizon ranked first, AT&T last. There was another one more recently. This is a mixed blessing, these demands, but what can you do about this to improve the perceptions?
Well, you get the network speeds and get the network quality up, and that's what we're basically doing. We're investing a lot of money. Keep in mind, we're investing in mobile broadband.
Right.
And if you think about that's where the effort, that's where the focus is going, I think you're seeing that pay off. You can see PC World, the recent tests on mobile bandwidth speeds. AT&T ranks first, hands down. In fact, it's really not close.
Right.
T-Mobile did well in the Northeast, but across the country, we're doing very, very well in terms of mobile broadband speeds. Voice quality in some of these areas is suffering.
Right.
New York and San Francisco, case in point. We think we're really getting ahead of it in New York. I know we still have some trouble spots, but we're getting ahead of it. This has changed the game for wireless. And you ask, what can you do? Well, you learn to operate in this environment. We're operating at a place nobody else is operating. And to put this in context, of all the mobile broadband traffic in the U.S., half of it runs on AT&T's network. All right? That creates some operational challenges.
Right.
You have to engineer networks differently, and you have to redesign networks. And so we're working our way through that, and we think we're doing well in New York.
Right. You mentioned that it requires an unbelievable amount of investment. I believe you've announced that this year you're looking at maybe $19 billion
Right.
of capital spending, which is a huge amount. There are very few companies anywhere that spend that much in a year. Let me ask you a question that touches on your previous experience, which was as CFO of the company. Everyone seems to agree interest rates are rising. How do you protect yourself against that when you have to make such enormous capital investments?
You've noticed some things recently in the marketplace, and specifically how you price for data. Right. And we have been in an environment where we price data on a flat rate basis. You know, you pay $30 a month, and it's all the data you can eat.
Right.
And what happens in that environment? You get a tail of people out there. Everybody's paying this, but out here in the tail, the top 2% are consuming the lion's share of this bandwidth.
Right.
That's an illogical pricing equation. That's a pricing equation that's not conducive to earning, decent returns on the investment you're putting in the ground. Right. In fact, what you're doing is the people that are paying $30 but using very little are subsidizing the people paying $30 and using not very much. And so we finally stepped out last week and changed the pricing model. Right. Said if you use a little, you pay a little. If you use a lot, you pay a lot. Right. That's a sustainable model. That's a model where you can earn respectable returns, and we'll encourage you to continue investing in these businesses. It was a very important move. It's one that took a lot of thought, took a little courage to do it, and we went ahead and made the step and did it.
Well, how do you expect that to play out? Because as I read it, it looked like a price cut for 98% of users, at least in the short term. Now, how do you expect that to change over time?
Well, you just said it. In the short term, there may be some migration and pricing down of some of your base. But over the long haul, it's a sustainable, rational pricing model. And when you have mobile data growing at 5,000% in 3 years, it's a model you have to get in place. Again, we expect this to grow 40 to 60 times in the next 5 years. And so that's how you substantiate it.